Let's bring in our headliner today, Kevin Simpson. He's the founder of Capital Wealth Planning at CIO as well, and he does manage the Enhanced Dividend Income ETF, or the DIVO. Welcome back. It's good to see you.
How are you, my friend?
I'm doing well. We'll talk about your strategy in a minute and some new stock picks that you have. Just give me your view of the market right here. Lots changed in a couple of weeks.
Yeah, what a difference a year makes, right? Or
yeah,
a week or two. You know, we're always looking for patterns, whether it's in weather, behavior, the markets. And I've spent 30 years looking at behavioral patterns within the markets. And this is just a completely different environment. You know, 32 years of a disinflation trade, Scott, 32 years of decreasing interest rates. And now all of a sudden we're talking nonstop about a Fed that's increasing rates. And it's a different game. You know, the free money trade that we've enjoyed for 3 years is over. And I love the Rocky Balboa market. I mean, I think we're going to take a few more punches before this match is over. But I like our chances.
You think we can get up?
It's going to be hard. You know, we're going from an incredibly high inflation number, CPI, PPI, 7.9, 9.9. Can the Fed give us a soft landing? It'll be a tough challenge. You know, you had Carl Icahn on scaring the heck out of all of us. You had Professor on yesterday giving us a little bit more hope. But I think there's a chance for it. I think that there's enough in terms of employment. The fact that we've got people working to the extent that we do, and that there is money that the consumer can spend, that we've got a chance of avoiding hyperinflation, stagflation, and maybe even we can possibly tiptoe around a recession.
All right, so we can deal with some standing 8 counts. We just can't handle a knockout, and hopefully we don't get there. Look, we talk about this covered call strategy a lot. In fact, we do it every time that Bryn is on our show, and we're happy that she is today. It works perfectly timed with you. Can you explain to our viewers who aren't that well-versed in that strategy why it works, what you may sacrifice on the upside and also risk to the downside?
Yeah, and Bryn and Pete do a great job talking about options. But from our perspective, you know, you're giving up a little bit of the upside. So our thesis is when we're selling into strength, the idea is we want to sell stocks high. We're never going to be able to time the market perfectly, Scott, to get out of everything at the ultimate high. So you forfeit a little potential opportunity to the upside. But the idea of harvesting volatility to be able to protect modestly the downside is really the reason that we like to introduce covered calls into the strategy. It's not so much about the cash flow, which is a wonderful byproduct when you have volatility in the markets, but it's trying to smooth the ride out a little bit. And admittedly, if we can capture most of the upside and protect a little bit of the downside, we think that that's a great way for investors to navigate volatile markets.